So thank you so much. And once again, warm welcome to all of you. What I want to do is I want to take a bit of time to discuss the progress that the National Bank made over the course of the past 1 year in terms of advancing the macroeconomic reforms. And I will have a presentation, and the presentation, the way I lay out the story of the presentation is divided in 3 parts. First, I'll talk a little bit about the background on what motivated our macroeconomic and financial reforms, to share with you the context of the reform, which His Excellency the President was making a reference to. And then I will present the main content of the reform, and for the first time, we'll also talk a little bit about the early result and the recent developments of the macroeconomic reform. And thirdly, we'll talk about the future plans for the financial system, the financial sector in Ethiopia, and future outlooks, and how all of us in this room can work together going forward. So, if I may start, just to take you back to Ethiopia's economic policies and performance over the past decade. And I'm sure most of these issues are quite familiar to many of you in this room. When the government that's led by His Excellency Prime Minister Abiy Ahmed came into political power in 2018, the country was experiencing a number of severe economic challenges that required urgent action and urgent attention. I mean, broadly, if you look at Ethiopia's economic performance, for most part, growth was very good. So it was relatively strong growth. But if you look at the source of growth and the composition of growth, much of the growth was largely based on debt-financed public investment, and it was not supported by robust and strong private investment. And if you look at the source of the public investment, it came from 3 fundamental sources. The first one is external loan, external credit from countries, particularly China. Second is, second source of the public investment-driven growth in Ethiopia was the largest and the systematically important bank, the Commercial Bank of Ethiopia. And the third source of the growth was the National Bank itself, the central bank, financing, for main part, the budget deficit. So this was essentially the story of Ethiopian economic growth before the reform. Now, so this approach of driving growth, for some time, it delivered positive results. There's no denying that fact. And indeed, it delivered on a number of fronts, particularly by expanding public infrastructure projects. But over time, it also came with a number of negative consequences. First, because we rely on external debt. Public debt levels rose so significantly and quickly, we faced serious debt servicing difficulties. And this especially relates to foreign debt. And the second part of the problem, and so-called imbalance, is given the government's large reliance on financing from the central bank, this led to a significant expansion, monetary expansion in the economy. And as a result, we faced high inflation for a sustained period of time. Third, because we rely on the Commercial Bank of Ethiopia, again, the largest bank of the country, this had 2 impacts. On one hand, much of the lending, much of the credit from the Commercial Bank of Ethiopia used to finance projects by public commercial companies, and this crowded out private credit. But even importantly, the heavy reliance on the Commercial Bank of Ethiopia led to financial instability risk that needed to be addressed boldly and courageously. Now, on top of this, the so-called macro imbalance in Ethiopia, the story of the macro imbalance in Ethiopia has to do with the exchange rate regime. Ethiopia's exchange rate regime is so misaligned, it led to a significant premium at that time, one of the largest in the world. Not only significant premium, it led to acute and chronic foreign currency shortage in the economy. So, a year ago, if you talk to a businessman, business people, if you ask them about the binding constraint to doing business in Ethiopia, everyone is talking about shortage of foreign currency to be the critical constraint for doing business in Ethiopia, particularly for the manufacturing sector. But not only this, there was a problem of dwindling reserve at the central bank. So we need reserve for resilience, but because of the misaligned exchange rate regime, there was heavy reliance on the central bank reserve for economic activity very, very broadly. So to give you a snapshot, to just share with a snapshot of what I just said, about the pre-reform macro imbalances, here are a few key indicators. For example, external debt had been increasing at a very, very rapid pace, and it indeed showed a 15 billion increase in less than 10 years. And you can imagine the challenge of debt servicing that's coming on the back of this debt accumulation. Again, reflecting the old growth model, credit to government, particularly by the Commercial Bank of Ethiopia, was close to 80% in the pre-reform years. And on the foreign exchange side, the gap between our official and parallel market rates reached 100%. And as I said, this was one of the largest such premiums globally at that time. So this was the difficulties that we shared. These were the challenges that inherited that we needed to address courageously and immediately. So it is in this economic environment that the government decided that course correction was needed and that we need to put in place a new direction and a new roadmap for Ethiopia. So as you may well know, this we called the homegrown economic reform agenda. And I remember distinctly the first version of the homegrown economic reform program was discussed and approved by the cabinet under the leadership of His Excellency Prime Minister Abiy Ahmed in June 2019. And I think this is an important fact, an important historical record, because the economic reform program came way before the IMF program and way before our partnership with the World Bank and other partners. So we put together the economic reform program in 2019, around June 2019, but the first IMF program was initiated and approved in December after 6 or 7 months afterwards. So really, the point that I want to emphasize this is the reform program, the homegrown reform program, was genuinely a reform program that was owned by the government, put forth and presented by the government to the broader public that essentially underlines the need for change and the need for course correction. Now, obviously, the homegrown economic reform program was a whole of government initiative. So it cut across different government agencies, including the finance, the monetary authority, the fiscal authority, Ministry of Planning, and other government agencies. But I want to share with you what we specifically did at the central bank, both as part of the homegrown economic reform and also as part of our own initiative to create a modern central bank. So the questions that we asked sometime around, I would say, July 2023 was this question: is the NBE, the central bank, fit for purpose? So we asked that question, and from that question, the number one task was to prepare a clear and coherent strategy plan that diagnosed our challenge, particularly as it relates to the monetary authority, and laid out vision and clear objectives, and not only that, how we would accomplish those objectives. So we came up in July, August 2023, a year before the current IMF program, a coherent strategy. So if you look at this strategy, it has 5 pillars, and the first 3 pillars, the 3 objectives, we call them, relates to what the central bank is supposed to do. And the 4th objective relates to our people, our process, our technology. And the 5th pillar relates to the institution itself, in terms of ensuring transparency, in terms of ensuring more credibility, in terms of being more engaged in terms of our core work. So the core objective of the central bank, the strategy outlined it, and we said the central bank's core objective, like other peer central banks, should be price stability. So the fundamental goal of the central bank is price stability. So we underline the need to focus on price stability. In addition to that, the second most important objective of the central bank is to focus on financial stability, and then after that, on financial inclusion, financial digitization, and financial stability were the core roles that we identified for the central bank. And we internally discussed this, and we made it available for the public to discuss it, to comment on it. And after that, the board approved the strategy, and we start implementing it. So let me just move to the core content of the work that we are doing, the content of the reform that we undertook. So like any central bank, monetary policy is at the core of our work, because we are a central bank in part, but also because the critical challenge that we faced at that time in terms of macro instability is the inflation problem. And in this area, we have really taken to task our vision of establishing a modern central bank that's in line with global standards. As you'll see here, the work program has involved on embarking on a number of firsts for the central bank in Ethiopia and for the Ethiopian financial sector more broadly. So for example, for the first time in the history of the central bank, we said, we actually said inflation control, so-called price stability, is the primary objective of the central bank. And for this, we had to revise the central bank proclamation that was in place for 17 years. And that proclamation was revised, and it created what we call a hierarchy of objectives. And the primary objective of the central bank becomes price stability. So in that way, this was the first effort. Second thing is, for the first time, we also introduced and established a central bank policy rate. So instead of focusing on quantitative monetary policy, now we are focusing on interest rate to guide economic activity. I'll come back to this point, but for the first time, we introduced a central bank policy rate. Again, we also, for the first time, established a monetary policy committee, an institution that will independently review economic developments, benefit from expert insights, and make recommendations and decisions on interest rate in the economy. So this is also a very important introduction into the Ethiopian economy. We also created new markets, something that I will discuss in a little bit as well. We created an open market operation. This is an operation by the central bank where we either inject liquidity in the system or withdraw liquidity from the system to overall manage the liquidity in the broader economy. And this is a new market that was introduced, and that's been performing quite well in the past 9 months. Again, we also introduced the first electronic interbank money market. I mean, the open market operation is basically an operation between the central banks and the banks, while the interbank money market is an operation, a money market between banks. So if banks, for example, face temporary liquidity challenge, they can borrow from another bank. So we created a money market, electronic money market for the first time with the support of, with something that gives us immense pleasure, with the support of the new Ethiopian Security Exchange, the new Ethiopian Stock Exchange, providing the platform, providing the electronic platform for this interbank money market to function quite well. So again, this is very important, and it shows also a collaboration between different government agencies. And we'll come back to this point, and this is a reform that's actually being implemented in a very, very successful way. Next, what we tackled was equally core to our work was, of course, our job of administering the country's foreign exchange system. And here again, we've embarked on a number of firsts. In fact, we put in place a clean break from the past and fundamentally transformed about 50 years of foreign exchange regulations and practices. Of course, the big part of the reform is a shift towards a market-based exchange rate regime, as opposed to the old system where the central bank controls the exchange rate regime. Now we are moving to a market-based exchange rate regime where willing buyers and willing sellers, or in other words, the market itself will determine what the exchange rate is. So this shift is a fundamental shift and the first measure in 5 decades. But the reform on the FX issue is not just about the shift to the market-based exchange rate regime. It's also about revising regulation. So there was, regulation after regulation that was accumulating in Ethiopia over the course of the past 5 decades, and all of these regulations were updated, rationalized, streamlined, and we came up with a single foreign exchange regulation in Ethiopia. We call that the Green Book. That's accessible to everyone, banks, exporters, importers, anyone who wants to understand the Ethiopian FX regime only need to make reference to one single document. In that document, we made significant revision on a number of policies that used to exist in the past. Just to give you a few examples of that. There used to be, as you know, particularly banks and private sector participants knows this quite well, there was this requirement of surrender of foreign exchange earnings to the central bank that has been eliminated. We enabled exporters to keep 50% of their foreign currency earnings indefinitely in this new directive. We also introduced new market players in the economy, such as FX bureaus, particularly for small value transactions. Instead of people going to banks, they can go to FX bureaus like any other country to get the foreign currencies that they need for medical purposes, for travel purposes, and this fundamentally and significantly eased the shortage of foreign currency for this low value transactions. We considerably relaxed the ability of businesses to access external loan. We also allowed foreign investors for the first time to invest in Ethiopian capital market in a so-called portfolio investment, of course, in a regulated manner. So the point that I was trying to make is this historic reform on the FX part is not just a shift towards a market-determined exchange rate regime. It's beyond that. It's a wholesale liberalization of the Ethiopian FX policy and reform that has been in place for more than 5 decades. Now, moving to the financial sector, our third core work area, besides monetary and exchange rate policy, of course, relates to our regulation and supervision of the financial system. Here, as I make reference before, most important reform that happened was in 17 years, we revised completely the central bank proclamation. And the central bank proclamation is an important piece of legislation that clarifies the mandate of the central bank, that defines the relationship between the treasury, meaning the fiscal authority, and the monetary authority, that put in place a term limit for key officials at the central bank that clearly articulates the core functions of the central bank, and in a way, it's a major departure to one that we have that was in place in practice for the last 17 years. We also revised the banking business proclamation, and for the first time, we allowed foreign banks to come and operate in Ethiopia. This is something that we've been discussing for quite some time, and now foreign banks, and some of you who are interested to come and operate in Ethiopia, are here in this room, I know, and foreign banks in Ethiopia are now allowed to operate. And we need foreign banks. We need foreign banks because we need their capital, we need their investment, we need their better risk management, we need competition, and we need innovation as well. So the proclamation was revised to allow foreign banks to operate in Ethiopia. But even importantly, if you just refer to the macro imbalances that we faced in the past, one of the biggest, the largest, banks that owns close to, I would say, 50% of the financial assets in Ethiopia, the Commercial Bank of Ethiopia, needed to be recapitalized. So a significant reform happened in that area, first of all, by moving some of its assets to the treasury and also capitalizing it better to ensure financial sector stability. So this is equally an important reform in that regard. Several steps in financial inclusion, several steps in financial innovations as well, which I don't want to go into in detail. So to summarize, sorry about this thing. To summarize, all of this various piece of the macro reform agenda, if you look at them, they add up to a coherent and a comprehensive reform program. But for us, but even more importantly, what I want to emphasize is how we did the reforms was as important as what we did in the various reform. The how is important as the what, the methodology, the process that we took. More specifically, the reform program, as His Excellency the President was saying in his speech, the reform program was truly well executed in our view because, number one, it was well prepared. So we took significant amount of time preparing for this reform, more than a year preparing, discussing, deliberating internally. Second thing I would say is this reform program is well coordinated. Well coordinated because instead of one single government agency taking the reform, we took a whole of government approach. So there was a very close coordination between the monetary authority, the National Bank, and the fiscal authority, the Minister of Finance. The Minister is here and he can testify. There was significant dialogue, significant discussion, and with other government agencies as well to actually present a well coordinated whole of government approach to the reform effort that we're taking. Not only that, the reform itself was well sequenced. Note, for example, before the exchange rate reform, which happened on July 29, 2024, we started monetary tightening a year before the exchange rate reform because we knew a year after the monetary policy announcement, we will embark on exchange rate reform. So it's well executed. So the tightening measure on the monetary policy started a year before the exchange rate reform. So it's well executed, it's very thoughtful, it's very planned, and in that sense, this is a reform program that takes quite significant amount of time. And finally, the reform effort itself was well managed. By well managed, I mean we've taken a number of mitigating measures to minimize any adverse effect of the reform on the poor and the low-income members of our society, including policies on subsidy. For example, we continued with subsidy on fuel, we continued with subsidy on fertilizers, on medicines, because we want to mitigate the impact of the reform. And also we invested significantly on salaries and safety nets, and this is part of the effort to manage the reform initiative. Now, not only this, as the President was saying, this reform program received, one of the special features of this reform program was that it received significant support, international support. And we were able to receive significant international support from a broad cross-section of the international community. So it's not just the international financial institutions, it's also bilateral governments in the Middle East, China, and the Paris Club member countries providing financial support and debt service relief as well. So it received significant support. I want to acknowledge the support and the financing support from the International Monetary Fund, IMF, and the World Bank on this occasion. For both IMF and the World Bank, I will also note that their financing package to Ethiopia was exceptional in size, reflecting the strengths of our reform effort. For IMF, for example, the Ethiopia program is the largest so-called PRGT, meaning sort of low-cost financing program in their history. And for the World Bank, it's also one of the largest DPO, or budgetary support programs that they have in Africa. So this is broadly sort of the rationale, the background, the context, and the content of the reform program. If I may now move to second part, and for the first time talk about the early result and recent developments of this reform, I would start with inflation. So let's shift to the early result of the reform and cover some of the recent macroeconomic development more generally. Now, one of the most notable early success of the reform work, particularly on the monetary policy front, supported by significant supply side measure, is the result on inflation. Inflation was close to 30% for 3 successive years. And we managed to reduce inflation from 30% to 13% in March. And this is a significant achievement because inflation now in Ethiopia is at its lowest point in 5 years. Now, of course, when we talk about this, people usually confuse inflation with cost of living. So when we talk about inflation, we are essentially talking about price growth, the rate of price growth. We're not talking about cost of living. And cost of living is still a significant problem in Ethiopia. We fully acknowledge that. And we also know that there is significant work ahead of us in that regard. But having said that, although cost of living is still a significant problem in Ethiopia, the progress that we've made in this regard, in controlling inflation, in reversing the trend of inflation, in breaking the back of inflation, was quite significant. And we are confident if we were to continue with the current tight monetary policy stance, and if we were to support it by additional supplies measure, we can project next year inflation will be below 10% and even lower. So this is an area that the central bank will, in concert with other government agencies, will significantly work in the months and years ahead. Now, another important and, in our view, impressive result in the inflation story is something that's actually partly driving the inflation story, is what's happening on the central bank financing of the government. As you know, the central bank financing of government deficits is one of the most inflationary forms of deficit financing. At NBE, our empirical studies showed that the monetary financing of the budget contributes to the inflation story in Ethiopia. So what we are seeing here for the first time in 12 years is monetary financing as a source of inflation has been eliminated for the first time in more than 12 years in Ethiopia. And this is, of course, for the main part, because of a prudent and strong fiscal management on the part of the Treasury, supported by efforts by the central bank. So for the first time, there is no monetary financing of the budget in Ethiopia in 12 years for the first time. So I think this is, for us, a significant achievement, partly because it will take out sort of the inflationary form of central bank financing to the deficit. And this historic turns of event, in our view, shows a move towards a modern monetary policy. It shows central banks move to a new regime. It shows, as I said, a strong effort on the part of the Treasury to finance its deficit in less inflationary ways. Again, if you move to the early results of the monetary policy, one important outcome was the market-based interest rate was another important objective of the monetary policy reform. In this regard, if you look at this really important chart, we were able to achieve a move to a positive real rate in the past few months. So the Treasury bill rate, the central bank rate, the NBE rate, and the interbank rate, these three rates are positive in real terms for the first time. This is important because what this does is it makes holding assets in birr attractive. It actually says, if you invest in Treasury bill, it beats inflation, essentially. So literally, we're making, any asset in birr quite attractive, and we moved significantly in terms of ensuring a market-based interest rate, and in that sense, this was also a success. I should indicate here that the T-bill rate will not necessarily stay this high over time, because as inflation comes down, the Treasury bill rate will also come down, the national bank rate will also come down, the interbank money market rate also will also come down. So the most effective way of reducing interest rates is actually by beating inflation. So this is why, in our view, inflation reduction is an important objective, not just because we need to reduce inflation, but also to help us lower policy rates. And we would expect in the coming year, government borrowing cost borrowing costs broadly in the economy will significantly reduce as we make progress on the inflation agenda. Now, again, another important outcome of the monetary policy reform is in regards to the two brand new markets that we created that I talked about earlier on. These are the open market operations and the interbank money market. These two markets, the open market, the OMO, so-called open market operation, and the interbank money market are new markets that were created in the last 9 months in Ethiopia. This never existed in Ethiopia before. The NBE's open market operation is essentially an auction that we conduct every 2 weeks, where we either take birr liquidity out of the banking system or inject birr liquidity in the system. So that's what open market operation is. It's an operation between the banks and the central bank. But because we're in the middle of an exchange rate reform, in the last 9 months, our stance was on, it has tightening bias. And because of that, what we did was largely liquidity withdrawing exercise, and the cumulative total has reached close to 140 billion, more than 140 billion. So if you look at the cumulative result of OMO operations in the last 9 months, it started small, but it's going and now reached 148 billion. So this is a market that was created and functioning quite well. The second important market that we created was the interbank money market. This is separate from the NBE interaction with the banks, and banks themselves have started to borrow from and lend to each other whenever they fall short of liquidity. And with this so-called money market, banks can now come to NBE only as a matter of last resort. So if one bank has a shortage, they can borrow from another bank. So we created this interbank money market, and it's functioning really well. So far, the cumulative borrowing and lending by the banks in the last 7 months since we started the electronic interbank market reached 600 billion Ethiopian birr. And we're so, as I said before, we're so happy because this initiative, everything is happening online electronically, and this initiative, as I said before, is supported by the Ethiopian Stock Exchange. So it's traded at the stock exchange. Now, very important outcome of this is on the monetary policy front. If we just move to the FX reform, this is perhaps one area where we've seen the most impressive response and result. So remember, when you move to a market-based exchange rate regime, one big part of that story is a big drop in the premium. And following the big drop in the premium, the FX, the foreign currency supply response to the Ethiopian reform has been truly impressive. Just to highlight a few examples here, our good export have more than doubled in the last 9 months. So it's an increase by more than 100% in terms of goods export receipt. So true to the reforms promise, the supply response has been truly impressive. FX inflow is significantly increasing. Remittance and service inflow are up between 20 and 30. Particularly on remittance inflow, although it has been growing, we acknowledge there is significant work ahead of us. Capital inflows, not least from IMF and the World Bank, and loan disbursement are up substantially. And even more importantly, remember one of the reasons for the reform was the dwindling reserve at the central bank. We managed to increase the FX reserve at the national bank by about 200% since the start of the reform. So there's a significant increase in reserve at the national bank, creating security, creating stability, creating resilience to the Ethiopian economy. So quite impressive result on the FX reform as well. Again, showing, validating the need for the reform, content of the reform, and the objective of the reform. Now, although this is on the FX front. If we just quickly move to the financial sector reform, with respect to the banking sector, note that though we have maintained a very tight monetary policy, particularly we capped credit growth in Ethiopian economy last year to 14%, and this year to 18%. Both deposit and lending in Ethiopian financial sector is growing at a reasonably healthy rate. So as you can see, deposit increased compared to last year, same period, by 34%. And domestic credit, also the reflection of the central bank policy in terms of credit cap, has increased by 20%. And most notably, more than 80% of this lending growth is now channeled to the private sector rather than the public sector, compared to the pre-reform period. Again, this is on the financial growth. If you just look at the financial stability indicators, I would like to note that this is another major pillar of the central bank's work. For example, we have for the first time started publishing financial stability reports, and we produced 2 annual publications so far. Here I want to highlight and say that our assessment is that the financial sector is currently in a safe and sound condition. All the 3 key metrics, NPLs, so-called non-performing loans, capitalization, and liquidity are in healthy territory. And of course, there is much more to assessing financial stability, but for now, let me just pass this by noting that the financial sector overall faces no major stability concerns or issues. Another important work of the central bank is on the topic of digitization. Well, digitization is something that we champion at the National Bank, not just for the sector to keep in line with global practices, but also to help us meet our financial inclusion objectives. And in this area, as you can see here, there is tremendous growth across all key metrics, whether you see number of digital accounts, close to 220 million. Some people have more than 2, more than 3 digital accounts. And the volume of digital transaction by number, by value, and it reached close to 12.5 trillion Ethiopian birr. And also in terms of digital channels, such as mobile banking, ATMs, and POS services. So what's happening in this regard is nothing short of digital revolution is happening in the financial sector in Ethiopia. Just again, another important point that we want to support more work on is not just on the payment infrastructure, but also going beyond payment, looking at digital lending and digital saving. This is areas where some banks, in collaboration with fintechs, are lending to small businesses, so-called micro loans, without any collateral, essentially using data. Cooperative Bank of Oromia, using the Michu platform, and the work that Telebr is doing is significantly increasing small loan to small businesses, and this is something that the central bank will also encourage. Now, again, on financial inclusion area, alongside digitization, this is also another priority work for the central bank, and this is closely intertwined with the digitization agenda. Here, as you can see, there is major progress across multiple metrics of financial inclusion. We, of course, recognize there is a long way to go in this regard, but it's worth mentioning, worth recognizing some of the major gains already registered to date, because we have close to almost coming to 300 million accounts in Ethiopia exist. Of course, some people have 2 or 3 accounts, but overall, this will be clarified with the progress that we're making in terms of FIDA, digital ID, but we have close to 300 million accounts, again showing progress in financial inclusion, but we know there is more work ahead of us, particularly in terms of supporting ag finance, in terms of supporting housing finance, and also supporting SMEs. Okay, I'll just talk about. So another important reform area is, of course, the work that we're doing at the central bank itself. Here again, we are doing all sorts of transformative change in our own organization to modernize our mandate, our priorities, our structure, and also to enhance our communications. But importantly, we also want to make the central bank transparent. And for the first time again, we had our first ever international audit this year. Again, this is part of our commitment toward this transparency and credibility. We also will transform very soon our academy, the Academy of Financial Institutions, in collaboration with our partners. Coming to the last part, the third part of the presentation, looking ahead. Okay, so looking ahead, what are our priorities? So the first thing that I would say is we should recognize that our recent reforms are not yet done. We still have a lot of work, and on the monetary policy, we have to deepen and fine-tune the current reforms, particularly the reforms that we initiated, and in moving toward this interest-based monetary policy. We also want to further deepen the FX market, and we also want to further move to a market-based monetary policy regime that will no longer rely on credit cap and no longer rely on mandatory T-bond purchases by banks. On the FX market, our goal is to make the market deep, to make it efficient, to make it competitive, and to make it orderly. So there will be a number of measures that we'll take in terms of fine-tuning the FX market. So this is okay. This was on the existing reforms, but I also want to move to the frontiers of finance, so to speak. We want to see the Ethiopian financial sector position itself in some of the most cutting-edge innovations and products that are in the global financial sector today. So in this area, we'll focus on these 4 areas. The first is on the digitization and payments space. We want to see more innovation, more work in that regard. We want to do better work in terms of remittance, because there is significant work ahead of us. We want to open the Ethiopian financial sector to foreign competition, because as I said, we need foreign banks for their innovation, for their capital, for their competitive pressure, and for their better risk management. In this regard, we want to see more product innovation as well. And we will take significant time to work on financial inclusion, particularly in making credit available to rural finance, to SMEs, and to housing finance going forward. So let me conclude. So what does all this mean? And I will leave you with a few final messages. First, as we see it, and I trust many in this room will agree, the future of finance is bright in Ethiopia. Our financial sector now will operate in an increasingly stable macro environment because we made a decisive and irreversible progress toward this macro stability in Ethiopia. But even more important than that, we will be operating in a sector that is competitive and market-based, a sector that is private sector oriented, a sector that's open to foreign entrants, and a sector that's digitally driven and increasingly reaching the underserved. So to realize this bright future, of course, all of us, we have to play our part. We at the central bank have certainly done our share, in our view, and so many other government agencies also did exactly the same. So it's up to all of you in this room and many others beyond this room to play your part through your continued expansion, investment, and also innovation. So my concluding message is a simple one. Let's all bring to our work a common strategic vision, take bold action, and show a patient determination so that we can turn Ethiopia into a beacon of light in the African continent. Thank you so much.